Hi, Anthony Viljoen here, CEO of AfriTin Mining, the only tin listed producer on AIM with big expansion plans, and we're bringing the exciting lithium on stream as well in the not too distant future.
Anthony, good to see you. I'm in your backyard.
Yeah, good to have you here, Matt. It's a beautiful May day in Cape Town.
It's not bad, not bad. We're here, we've got a bit of winter sun here. Look, you're here for the one-to-one, you're also here for Endowment as well. We're taking the opportunity to catch up with you and maybe even pop up to site at the weekend at some point. Absolutely. And take a look at what's happening on the ground. But since we've spoken to December, so recap for viewers, and we'll put the link below. They can look at that interview as well, and for the multiple interviews that we've done with you now. Yes. You were producing cash from the tin. It was a good strong tin market. It continues to be a good, strong tin market in terms of tin price. Yeah. But obviously the market's gone a little bit wonky for miners in the last 4 to 6 weeks. Yeah. You told me that you were going to try to look to increase the output from the tin. But the big question for me was always around the lithium and how you advance that, how that growth story continues. So PEA out.
Yes.
5-year plan out.
Yes.
Why don't you give us a recap of what that told you?
Well, look, let's just start first and foremost with what we've got there is probably the biggest resource that I've ever seen. For a junior mining or a prospector developer to have something like this, you probably only get one shot at it in your life, and I think that what we've got is really turning into something special. So, yes, we took a bit of an unorthodox start, get ourselves into production. The two key takeaways was let's get cash flow going, but more importantly, let's de-risk the larger phase 2 plant. Right. It's I say unorthodox, but that's how people mined for centuries.
Yeah, it's true, but different countries, different jurisdictions play it differently. Canadians like to kind of drill forever. Yeah. Don't worry about the revenue because cash is plentiful. Well, usually, sometimes, occasionally, it's plentiful. Whereas, I kind of quite like to get into cash early. It's less dilutive for your shareholders. It's kind of proof of concept in a way. But again, the big thing that you needed to show the market was, yes, the scale's there, but how do you grow that revenue? How quickly will you grow the revenue on the tin component? So, again, maybe help us with that.
Yeah, so look, I mean, just on the tin alone, we're making a 50% EBITDA margin, so we've got decent free cash flows. But the whole thing about this is scale. So having a gravity plant is all about the efficiency of material flow through the plant. So you can imagine the bigger you go, the more efficient, the better your economies of scale. So that's what we're focusing on now on the current operations.
Right.
So the current operations are their own autonomous being now.
But how do you play that? Because obviously, with that kind of scale of capital equipment, it comes capital costs, which you've got to juggle. You're circa sub £100 million company out there. Cost of money is a very important part of the factor of growth, and you can be steady, slow, accretive growth, or you can take the plunge. Has the tin market given you signals that they're willing to let you do that?
Yes, absolutely. So, but what also very unique about our position is, so when we raised equity, we took that equity, we built something, and that's producing cash flows. Now we're leveraging those cash flows to grow. So we're bringing Standard Bank in as our financing partners. So they're providing all of the capital for our expansion, and it's their intention to be our financing partners for the bigger scale.
I think that's Standard Capital Bank trying to knock on the door. Can you hear that?
I think we've got some more money.
We've got some guy on the roof doing some fixing of something. Anyway, I apologize for that, and anyone who has to listen to this. Okay, so that's interesting. But in terms of the timing of this kind of phase 2 bit, and what can that step change be for you? I mean, how ambitious do you go?
Well, very ambitious, Matt. Right. Look, we've built a really solid team, of good engineers, geologists, and the important part about building a team is getting that cohesion in the unit. Right. And now that we've got that cohesion, we've got a team capable of executing really big projects.
Right, but I think your shareholders and people looking into this here excited about what's going on with tin at the moment are going to say, right, well, how quickly does this advance? Right, but I think that's what they want to know.
And it's advancing very quickly. Okay, let's just do the short answer very quickly. So if you just take a look at our growth timeline to date. I mean, how many junior miners do you know within their first 4 years of being listed are in production and profitable?
Very few, but you've got the benefit of history from a producing asset, right? And you've just done the PEA, so again, you've got to go through certain phases around economics, and again, so I'm just trying to get a sense of which bits can you skip. When do you kind of get to an end point which says, oh, this is truly world scale and it starts affecting share price? Great. You've had some recently, but it's come off again. Share price growth, the market cap that you can be, the enterprise value that you want to be. So what did it tell you?
So look, let's talk about the catalysts then, the key areas. So obviously we're expanding the plant at this stage, and that will give us a better indication in terms of scale for phase 2. That will come in Q3 this year.
Okay.
We're working on an ore sorting technology, so that's also very exciting.
Standard technology?
Yes,
unique to you?
It's standard technology.
Right, so nothing new. You don't need to worry about that falling over.
No. So it's becoming more widespread in the mining business.
Okay.
But what it does is it has the potential to increase your feed grade by 2 to 4 times.
Yeah.
So that technology in itself can really change this ore body. Then obviously the lithium,
right?
Like that so what we're doing with the lithium is setting up a pilot plant, so that we can run campaigns.
Who's paying for that?
We pay for it from our cash, our cash reserves,
right?
And our cash flow. We make, that's the nice thing about making money. And then that will allow us to isolate lithium concentrate. And then we can go to off-takers and test that.
So you're going to stick with concentrate for now?
Yes.
Not worried about going further downstream at this point?
Look, it's never say never, because the economics are quite enticing at this stage. And there's not enough lithium being produced in the world. There are a lot of explorers and wannabe kind of miners, but very few new hard rock deposits coming on stream. And this, for us, it will be a bolt-on to our circuit. Very unique.
Okay, and so with the PA, you talked about the tin and the lithium and how you deal with that together. You're not separating these out. So there's no spin out. There's no sort of partnerships that you foresee.
No. Look, it's all part of the same ore body. So it's literally the heavier material goes one way. That's the tin. Lighter material goes one way. So.
Right, but in terms of bringing in a more technical partner to be able to capture some of the other sort of downstream value, because the market, I mean, it's up 400 times from when we spoke at the beginning of last year, right? So price incentive is there for you, maybe not sustained, but. That's another route for you, is it? Or is
look, it is an interesting route. I think the lithium market is evolving very quickly. Yeah, and it's definitely something that I think we would be exploring. As we understand more about the lithium.
Okay, and the interesting thing that's going on at the moment is obviously inflation. I mean, you must have talked about it every week with every interview. People concerned about marginal projects not being able to withstand the pressures there. But you're producing cash. You've already got an operating business, and it's just about upscaling. So you're not starting from ground zero, having to order in equipment, etc. That's got to help in terms of decision making over timing for sure. But what are the impacts for you in reality, day to day operationally?
Look, to be honest, like it hasn't been as profound as some guys in Europe have been experiencing. Yeah. But it's so the big costs would be fuel and steel at this stage. So we have noticed that. But Namibia is a unique country because 70% of the power production is renewables. Yeah. So we draw our power off the grid. So haven't been dramatically impacted on that. But inflation is something real, and and I think it's going to impact a lot of guys' projects going forward.
Yeah, but I guess the interesting bit for me is like as you develop the economic studies, move it forward from the PEA, is work out what the actual cost is, because it's not just a flat rate. It's 7% against everything. It's just the things that you're short on, and I guess with the renewable energy, it kind of helps too.
Yeah, look, it is, but that's the whole point of how we've gone about developing this project. Now we understand the cost. So, just for instance, in the PEA, those numbers are based on like actual performance of the plant.
Yeah,
that's over the last 18 months.
Right.
So we're confident of those numbers, and we're confident that we can manage through that. The thing about mining is all you can control is what you can control.
Yeah, But it's interesting because you don't have to actually factor in sort of contingencies, as much contingency in that sense.
Exactly. Exactly. So
it's empirical data,
and that's it's really it gives us a unique sort of competitive advantage, being able to be that confident about our numbers.
Right, and in terms of people on the ground, I think the other thing that Namibia has is the ability to make sure that you've got nationals working for you, local people on the ground doing this, and attracting the right type of skill sets in countries.
So it's something we're very proud of. We recently listed in Namibia. We did a dual listing in Namibia.
Yeah.
But so it's we are proudly Namibian, and 97% of our workforce are in fact Namibians, and 60% are actually of our top management on the ground are actually ladies. And what we did is we bought them from university, recruited them, have trained them up, and promoted them to management level. So look, we're very proud of our record there, and working together with Namibians and local community members.
And that's obviously quite a big factor today with fundraising. We had our CEO in yesterday, and she was saying that it's not a joke, it's not a gimmick, it's a reality in terms of these funders want you to have your ESG credentials in place, not tick box exercise. They want to see proof that you are hiring locally, you don't have issues locally, that you are looking after all of that properly. So, and Namibia probably no more than more than most, I suspect.
Absolutely. So look, everyone talks about the multiplier effect that a mine has, but you'll see when you're out there, just the increase in economic activity, like the micro enterprises that are coming up. Our engineering is the guys that started their whole business off the back of the mine. So it really is it's something that I'm proud of. Being obviously an African, you want to see the benefits going back into the community, and it's definitely something that as a CEO I take a great deal of pride in.
But Anthony, look, thanks for coming in today. I'm seeing you here, but I'm going to see you in the field, in the flesh, over the weekend, and we'll see how things are advancing.
We've got to get you in a hard hat and some safety boots.
I look good in those.